more than 200 points overall. And here we go, down about 103. But still, the S&P 500 at this level of 1338 does not look healthy.
No, it certainly doesn't. And of course, let's look at the others here. The Russell also down about 1%, I guess, on the day. And but again, I think all the story now is what are we going to hear from Apple, Netflix, and some big names coming up. This is an hour you just can't miss if you have money in the market or thinking of putting that cash into the market. We are about to get to breaking news, as we say, from Apple, Netflix, Aflac, Panera, and Broadcom. My, oh my, we'll have instant analysis on what those numbers mean for your portfolio.
And we've got the perspective you will not get anywhere else. It's a Fox Business exclusive with former FDIC Chair Sheila Bair. Does she think the LIBOR rate rigging scandal has gone too far? Who should take the fall? And most importantly, is the chatter getting louder about breaking up the big banks? We'll ask her.
All right, but first, we'll tell you what drove the markets today with today's data download. Weaker than expected earnings, weak manufacturing data, and continued European debt concerns sending stocks lower today, with all three indices posting their third straight day of losses. All 10 S&P sectors also ending in the red, led by telecom and materials. The three-day slide continuing to send investors into safe havens. Wow, the 10-year yield now falling back to record lows, ending the day at 1.4%, down 2 basis points. The government also sold two-year notes today at the weakest yield on record, signaling traders expect more easing from the Federal Reserve. And the dollar rising against most major currencies today, hitting another two-year high against the euro. The euro, by the way, hitting an intraday low of 1.204 today.
All right, let's get to the action. Larry Shover is in the pits of the CME Group. Joe Keating says earnings are no longer a positive factor for stock prices. He's going to explain. And we've got Brian Sozzi in the chair. He says he likes to pick individual stocks, not sectors. Again, it's the old stock picking market, not a stock market. He's going to tell us which ones he really likes right now. And Robert Gray standing by to break in with those earnings reports as soon as they are out. I want to go first to Larry at the CME, looking at the activity. Look, let's just get to the last hour. That really is the one that is mattering the very most. We lopped 100 points off the losses there. Does that give you any hope for tomorrow?
It might. It's just a repeat of yesterday. Let's keep in mind, it's hot everywhere, but it's boiling over in Spain. And I think that's where the action is right now. People are afraid. They don't know which way the stock market's going right now. Maybe 1380, what we hit last week, is the peak of the year right now. People are wondering, hey, are we going to hit the 1266 low of June? If so, what's going to happen? There's a lot of confusion. It's a whirlpool of no one knows what's going on right now.
We mentioned that this may spur action by the Fed. We're continuing to get weak economic data, Larry. Are you thinking that too? Or do you think, obviously, the next Fed comments coming up next month are going to be very important?
I don't think so. I think August 1st won't be that important. I think Jackson Hole perhaps will be. I think the market's maybe looking for August 2nd in the ECB.
Okay. Hold on one second, Larry. We got Panera Bread numbers, so I just want to get to that because the stock is moving in the after-hours market on these numbers. Robert Gray.
It is absolutely, Liz. It's jumping up some 7% here in after hours, and that's because it was a double beat. Revenue numbers coming in ahead of expectations, bucking the trend we've seen where we've seen weakness on the top line with so many companies. $531 million here. Earnings per share $1.50 versus $1.43. They're also boosting their full-year outlook for their profit. Of course, a very U.S.-centric company, so the stronger dollar not as much of a headwind for Panera, obviously, as for some of the multinationals. But again, a double beat, boosting their full-year forecast. Shares are jumping in after hours.
All right, Robert, thank you. Some very impressive there. Let's bring in Brian Sozzi if we can. Brian, what do you think of this? I mean, Panera beating on top and bottom line here. Are you impressed?
I am impressed, and it goes what I'm saying. You have to pick individual stocks. Chipotle stock was crushed because they actually had to lower their prices. Right? And within Panera, I think you're going to see it, and they probably had good transaction value growth. That's what's differentiating them compared to what the Chipotle disaster.
They've had. Sorry, Liz, go ahead.
Look at grain prices have been really pricey, and they were able to manage that. I mean, it's unbelievable that the market is really liking this number.
Correct, and you have to think about why. Panera traded down in sympathy to Chipotle's results. And when you dive into Panera, chances are they were able, like you said, to offset higher commodity prices, which has been an odd story, come to think about it. McDonald's warned on higher prices. Panera probably had higher prices. Chipotle higher prices. Even Taco Bell, too, as well, within Yum Brands results.
And, Brian, this all comes, of course, even though there's been a big reshuffling at the top of this company that caused some to perhaps, raise some caution about that, but apparently not, based on these numbers.
Correct. And then this is just, again, because it traded down so drastically. I need to get in the results. I need to see transaction value growth because that is a key thing off these restaurant results.
Well, you know, Ron Shaich, the CEO, Larry, I don't know if Larry Shover's still there with us, but he's done some really good things with this company because at a time when Brian makes a great point. You know, you have Coca-Cola, McDonald's trying to deal with, you know what? They have an issue with the stronger dollar. Is Panera that globally sensitive to what's going on with the stronger dollar? If not, then that's their win.
You know, I think they might be, but on the other hand, they have a lot of room to expand, especially in the United States.
Yeah.
And back to the earlier point, I mean, they've beaten estimates 4 quarters in a row. They have a lot of room to expand. I'd like to see more of them around here, actually. It's decent food. The price isn't that bad. I think it...
Breaking news to Robert Gray, not earnings related. What is it?
Yeah, Liz. Well, this may help explain us jumping up off the lows. If you look at an intraday chart, in the last sort of 10 minutes of trading today, you saw the major indexes getting a big boost, volume kicking in. Our colleagues over at the Wall Street Journal reporting that Fed officials see action if growth doesn't pick up soon. The headlines also going, the Federal Reserve is moving closer to action to spur growth. Bond buying, rate guidance, lower reserve rate among the options the Fed has. They could make key decisions next week or in September. Again, we saw stocks getting up off the mat here in the last few minutes of trading. You see that on the screen now. Also, the euro strengthening against the dollar. The reasoning being by many traders, obviously you can ask these guys, but any moves by the Fed could weaken the dollar and strengthen the euro, and that would make those risk assets a little bit more enticing. And lastly, Liz, one of our guests asking about transaction growth at Panera. It was up 0.9%. The average check growth up 6%, and they see both of those numbers growing later this year.
Okay, but what's hitting the tape is John Hilsenrath, the Wall Street Journal's reporter, who is very close with a lot of Fed members, reporting that the Fed is getting frustrated and may be ready to move. We have Joe Keating standing by with Center State Bank. He's the chief investment officer. Listen, I know John Hilsenrath. He has their ear. They have his. And if that's the message that's coming out, is QE3 far behind?
Probably not, Liz. And you know, they always like to put out some trial balloons in terms of when they're going to make a policy change. And this would be a somewhat controversial policy change to go into QE3. But for investors, you certainly don't want to be short the stock market if the Fed's going to come in with QE3. There's no doubt about that.
Brian, let's bring you in on this. So I mean, look, we know the economic data continues to be soft, although we've been kind of stuck in the mud, as Bernanke put it himself, where it's okay, it's not bad enough, if you like, to actually trigger QE3. What are your thoughts on this latest bit of news?
I think this is surprising afternoon already. Panera, you have these results. Fact of the matter is, Bernanke testified last week, and the market basically said no QE3. Coming into actually next week, when the Fed actually meets, you didn't expect much because they're not going to update their projections. You kind of thought that they're going to, kick the can down the road. I can't believe I'm actually saying that, but they're going to kick the can road down into the fall season and announce QE3 then. This is kind of a tell, surprising. Okay,
we got to get to Robert Gray because Netflix is now out, and I guess looking at the revenues, the market is hating this number.
Well, the revenue coming in $889 million is pretty much in line, Liz, and we saw the stock jumping up off the mat more than the market here, and the earnings per share numbers on a non-adjusted basis. Unclear if it's an apples-to-apples comparison. The earnings per share expectation was a nickel. This is 11 cents, but the stock is tumbling. We're digging into this. I'll have more for you in just a minute.
All right, Larry, let's bring you in. So many things to talk about here. Well, let's begin. First, I wanted to ask you, Larry, about these reports that perhaps the Fed looking even more strongly now at QE3.
I still don't believe it. I don't think the market believes it right now. And I look at the price of gold. Gold doesn't care. Gold doesn't seem to think there's going to be a QE3. And if there is, will the market even care? I mean, 10-year rates right now are 1.4%. What can we do to stimulate a QE3? I think all eyes are on Europe right now, especially with Spain. That's too big to bail right now. Some structural changes have to take place.
Okay, but let me just then say this to you, that even the mere headline coming from the Wall Street Journal was perhaps what did it. You never know with these things, but suddenly the market is coming well up off the bottom, and you know that this market loves QE. I mean, it's bad for it. It's like 50 cookies, but they'll take it over the real steak and potatoes.
Yeah, and you're exactly right. But the market also says, like, what are they going to do? There's so many different things that they can do. Is it's clearly something going to do that's going to help the broader market, because more of the drug, less of the effect. The market's up for grabs right now. No one seems to know exactly what they're going to do, and they'll wait to find out.
Okay, I want to ask you quickly, Brian, let's get it back to Netflix, because this drop in the stock is pretty dramatic, and we're seeing the close on this stock was $80 and now it's $72 and falling. There's something in here that people really don't like. How about this? Netflix, I'm looking through these headlines. They are in essence saying that the international streaming subscribers, 3.9 million to 4.4 million, that's the outlook for Q3. The streaming was where they really had the opportunity to have a nice move here, but it's just nothing is exciting here in this report that is making people think that this is a company that deserves to jump back up to its historic highs.
Correct. Let me add on, Liz, because this is exactly what I put out in my note this morning. Slapped a sell rating on this baby. I think it was overvalued. The key thing with Netflix is they're expanding so aggressively internationally. They're having to eat those costs up front. That hurts it. Second thing, this stock traded up big time when the CEO came out on Facebook and announced that their subscriptions might be better than expected. Wrong. Chances are they had an unrealistic 7 million subscriber growth outlook for the full year, and I don't think it's going to happen.
You heard a lot of people doubted that, and of course they have been expanding Netflix into the UK, into Ireland, into Canada, but they got a long way to go. But the stock tumbling after hours. Well, thank you very much, Joe Keating, Brian Sozzi. Larry, of course, we'll check in with you in a few minutes to see how the S&P futures are closing.
And of course, we're still awaiting earnings from Apple so far. We've gotten Panera, we've gotten Netflix, but Apple, the stock up more than 50% over the last year. Will a good report send the stock even higher? We'll have instant analysis. What about Apple TV? And nobody's talking about that. Are we going to hear about that?
Good question.